Hey. Oh, that's weird. Chat is unavailable. I didn't think it had started. That's not normal. Well, we may be in a weird situation. If there's no chat available, I don't know how to fix that. Let me look into this real quick. Let's take a look. Let me see here. Oh, hang on. Let me try something real quick. I think I might have needed to click. No? I didn't. It says it's not. Well, this is odd, because I don't have chat available. And you guys can't tell me if it's available. Let's see. This is not what I want. It's either an error or I got a strike or something. I know my account's verified. This is kind of a pain. Let me see if I can figure it out. I'm gonna try to work through it real quick. Verify the chat is enabled in the live stream settings. I don't usually have this problem. I don't even know where that would be in here. I never have to mess with that. Yeah, I don't know. There's really nothing different, so... Nope, it's all right here and it's not working. Well, oh, interesting. Okay. I can watch my own. I can watch my own thing, I guess. Yeah, as a participant, this is gonna be messed up. This isn't gonna end well. Sorry about this, everybody. Technical problems. I'm gonna watch it. I'm gonna watch my own stream and see if I can see the chat. Yeah, I can. Really odd. Okay. Okay. Yeah, I can't, for some reason I can't see this on the other page, which is really weird. I don't know why that is. There's some kind of a problem on their main stream page. So let me see what I can do here. Maybe I can pop out. At the very least, I could run a second page and pop out this chat. It's kind of not ideal because I'm streaming and having to do a second page, but this might work. It's just gonna take a lot of power that I don't want to take. All right, whatever. So I just had to make a new pop-out chat so I could see what's going on. Thanks for your patience. I'm gonna go ahead and turn off the Discord so I have less bandwidth running here. We've got a lot going on. Got a stream. I've got a stream page, and now I'm watching the stream. It's like too much video memory kind of stuff. All right, that's enough of that. Hopefully this stays updated as we go. So, excuse me, a couple things. So on yesterday I didn't get on at all. My voice has been a bit crackly lately, and I was pretty fatigued yesterday, so I didn't want to get on. Didn't want to do a stream. There wasn't much exciting in the way of price action, unless you're like me and you were in like AMD, which really is just taken off. And I actually already got out right around here, and there's probably a bit of life left in it. I'm not really sure at this point. It's already come above what I would have considered to be like a top. It's really coming into that final push right now. It may go further if it continues past about 130, but yesterday had a 9% day. So, good morning. Yesterday I had a 9% day, so it was a pretty huge day for AMD. For AMC and GME, there wasn't really much to talk about yesterday. The sideways action, not particularly impressed with it. Really could be very, very bullish. I'm seeing we've got some pretty strong divergence on like a 15-minute to 1 hour setup here. You can see that the current low that was made on AMC made a higher bottom on the RSI and on the MACD, but, and this is the clincher, right, is that you can't really you can't really say like a divergence is completed unless you get the actual bottom. So like the only way to kind of confirm a divergence in that case is then to confirm like the range breakout on the bottom. And the reason that's important is that it is a good way to day trade or to swing trade if you are willing to take the risk. But you have to assume that this is a risk, because if it's a bottom, it hasn't actually reacted like with a creek jump yet. And that's the first step. You can see that I've got the most basic kind of creek up here that you can have. It's a bit of a wedge action right now. It hasn't reacted over that yet. It's actually pushed above and then rejected, which is fine. That created the local top. This is a double top action right here, 1, 2. On my trading view chart, it looks like that second wick goes lower, which might be the case. If you have a more specific like fractional penny view, it might show that. I'm not sure. But on my chart, it still says it's the same. And then I went to like the daily chart, and it's also like a double top. Now this double bottom doesn't quite exist. It might exist actually, now that I think about it, because that's a Thursday and a Friday. It may exist. Take it back. So you have like a Thursday, Friday double bottom, and then a Friday, Monday double top. This doesn't really bode super well either way. As you would be aware, you kind of have to just read the range and get it right. I was looking at it yesterday and saying that like the one thing this reminded me of, which isn't positive, was this range back here. Now there was a sign of weakness here after the double topping action, but like when we went up into this top, between those two, I mean, there was a sign of weakness. I don't see that here at all, not yet. There's nothing particularly bad. This double bottom and double top don't seem to have much of a weakness in them. It sort of just depends on your outlook, you know. You can see that the way I illustrated this lower blue line was actually looking more at the lower portion here, not the first hit. Now, if you went to the first hit, certainly that could have been seen as a sign of weakness. And then this is like a hook. Both work though, because they're both interacted with on the way back down. So what I'm talking about is essentially like a cross down through like maybe an ice level. This was a temporary support. It didn't hold immediately as a rising trend, as a trend support. Neither did the second. So in either case, you wouldn't have much to argue about. There's no holding of the trend support yet. But that being said, you know, this doesn't put a lot of distance either between these two markers. So you can see like if you pick the first bottom, that would be up here maybe as the crow flies at like 316. You pick the second bottom, it says the crow flies at 314. We're nitpicking at this point. Basically that 315 area would be the resistance, and it makes sense. Well, when this thing peaked back in May on the 16th, which is a month ago now, it was up here around 318 to 317 kind of area, and maybe as low as 316. Yeah, so 316 to 318 area. That's still the same region that we'd have to break out right now if we were to have a reversal. It's also where the creek jump would be. And eventually, you know, if you were to go up to the top, an SOS around 323 would lead you there. So it's kind of nitpicking, I guess what I'm trying to say. And I don't really have any strong preference about that. So what I was thinking yesterday was that, well, either way, you get a weakness here, you get a weakness here, and then it drops. So the way this would work, if this is kind of like a bullish bottom, is that you'd have some kind of a divergence here, which we do have, thankfully. And it does go all the way up to at least the hourly, which is good. And then you kind of look at the waveform and see the separation and the distance between the waves. So what I did is a little bit bizarre maybe to some, because you might be thinking, well, you said that may not be a cat ear and all this stuff. It's not quite right. When we talk about the shallow S curve as we spoke about it, that would represent a cat ear in its full. It's still a breakdown. Um, the difference being, of course, it doesn't go as low. So if it's a shallower cat ear, you fail to make that higher high here, which we did. That was technically like there from the beginning. It had to be either this was the cat ear with a reversal or this whole thing is the cat ear with a reversal. And I said that it may expand and it might be frustrating because of that. But that's it. That's the breakdown. So you have the cross already in the books. Like that's happened. Once you get that cross, you're looking at those rising trends to the upside as possible retaliatory targets if you end up going back up. But until that happens, this is just an S curve, right? Meaning like you've now created like a base. And I would say you, meaning like shorts and sellers, have created sort of a base to propel forward. You can think about it like an LPS if you want, going in reverse, or an LSPY if you want to use those terms as well. That's fine. So what I call a shallow S curve is one that doesn't actually go the full 50-50 distance, which would normally be from about the mid zone here. There's typically like a spot, and I think ours is actually pretty low. There's typically a spot that's anchored on. Sometimes it has to do with that very first drop. Sometimes it's the second. It's rarely the third, because by the third drop, you're already on the second ear, which is the breakdown. So there's a couple points I would be looking at. One is like right here at 338, and then the other is right there where we made a sort of a triple bottom at like 333. I think that's more likely 333 because that was used as a drop zone as well on the opposite side. So when we got over here, we really just sat on it. So that's basically where the drop ledge is, like where we kind of went off a cliff. And that's where that support was lost. And there was a weakness early on, kind of pointed it down, so on and so forth. So I don't think this is super controversial just to say like that's probably the middle. Now, that's very, very low if this is a full S curve. Okay, so it's important to know like a shallow S curve may use a different middle. And I think the other middle would be maybe around like 350 down to 347, where these resistances are. So just like you have these double top down, you have a double top up. That could also act as a kind of center point for a major move. So what I mean is like, if you look at this, there's actually another marker right here, 347, and that's used as a resistance as well. So there's, again, sort of a double possibility. Okay, now both of these could lead you down to near 3. And I had mentioned that 396, I think once or twice, 398, or excuse me, 296, 298. $3 right on the dot is probably fine as well. If it goes significantly lower, you're talking about like the 270s. And this is something that I did mention, but probably didn't mention it enough, right? That 278, that's very, very low. It is, but it's not completely unrealistic. Most of the time, this represents like a creek backup. In this case, it's a little bit of both. It's a backup and a breakdown. There's clearly a backup there. If you look at the tippy top coming down, these are parallels. You can see that backup is reasonable. I mean, you can go down as low as 380 and still have some kind of a final up thrust or something. If it does that, I think obviously you're less likely to make some kind of massive high. But this is AMC, folks. And like we've been in situations where it's done stuff that are really, really deep retracements and still come nearly all the way back up to the top, you know. These reactions can be extremely large by comparison to maybe some other tickers. So even though it may go down possibly as low as 378, could it still come back up to like near 380? Yeah, or excuse me, 278. Could it come back up to like 380? Yes. Like it doesn't phase me at all. Like I would even say it could even come up beyond it. And there's proof plenty of other places. I'm not gonna say that this is like something you should hang your hat on necessarily. Like, oh, I'm gonna definitely do this play because of this or that. But you know, I always think about this area, the volatility involved in these moves back in 2023 early part of the year. I mean, it's just crazy how far these up thrusts came up repeatedly after dropping and making new lows. Clear signs of weakness is still pushed up really far afterwards. So I'm not saying that this is a good thing, and I'm not saying that coming down to like 270s would be a good thing. Okay. I'm also not saying that necessarily does that either, but I think that you have to keep that in mind, that that's a possible place. And I found kind of an interesting, and this is sort of a secondary motion, but this is kind of interesting. There's an anchored kind of directive here. There's clearly like steeper ones. I'm not saying that this is the only one, but I always think about waves as like multi-parts. There's like top creeks, there's bottom supports, right? Bottom creeks, I call them, a lot of times I call them the ice or whatever, where it's like a rising support. And there's a falling resistance, right? That's like your main creek. But there's often what I call like a cross, which is sort of a middle point, right? And back here on this big drop down from February all the way to April, there's a very clear and evident like middle point, right? You have what we would see is a very, very, very simple and straightforward kind of S-curve. And again, here's some of that at play. You see that drop ledge right there is right on the middle, right at 50%. It signified the second half of the move starting, right? Well, this is crossing down through something. Like, what is it crossing through? What is it being anchored on? And as best I can tell, it's a pretty straightforward setup. It's being anchored on this, really what was created as a sign of weakness earlier on right here. Again, a spring, yeah, locally, but on the big picture, notice that this is directing now a trend. And I think that's really fascinating. That's from early February, even the end of January, right, bouncing into February. That downward motion, this is really what's being used in combination with a horizontal support to drive the direction of that drop. So this is basically a wave down. And then if you look at where that is, when we came back up through that same kind of cross down, right? We actually came back up, and I had been doing this S-curve. I know you guys had seen it before. This one. We had talked about this quite a bit because we used the iterations, remember, to like kind of measure it out. And we were saying that like, well, there's some really low ones, you know, you get stuck as low as like, I think at the time we were talking about like 330s to 315s. That was being a big sticky area. But there's a possibility, you know, that because of the way this is breaking out, it goes as high as 4, right? So what would be appropriate then is actually to come all the way back down to that level, weirdly enough, even if it's kind of short-term seen as very bearish. It could make sense. It wouldn't be like way out there, okay, to do that. Okay, now is there a bigger version of this, right? Yes and no. You know, we kind of talked through this in a couple different ways before, and I don't want to get too, again, in the weeds about iterations. Those things get you really lost. But they're based on your understanding of, frankly, like patterning and fractals. And so they can be highly accurate, but they also have a lot of subjectivity to them in terms of like how you interpret certain moves. I do my best to use breakouts and creek crosses in combination with what appears to be the reverse of that, which are breakdowns, right? On the opposite side, to try my best to interpret that. And I've gotten pretty good at it, although even in all that, you know, we were talking about upside here, and it was still difficult for me to know because you just don't know what you don't know. So you find high probability targets, like the $4 mark was the super high probability target. And then on either side of that, we still had others. You know, we had some going up to 460. We had others going down to 330. It's pretty much like a shotgun of targets right there, right? Where you have like a high probability. There's a lot intersecting here, but then there's also like these outlier targets that you're not really sure why they come into play, but they might, you know. And anyways, so I would look at this and say that like, yeah, there's evidence here that you have iterative motion, but when you start doing stuff like this, it ends up being a bit convoluted because I could do this and say, well, I think that's the mirroring or all this jazz. Maybe it is, maybe it is. If it is, there's a lot of weakness here because, and this is definitely distributive in a lot of ways because of the way this is like pulling down in these deep U shapes, even lower than it needed to go. It's not rising up above in the early part. It's not pushing higher, but weirdly it changed character, right? And we talked about that because there was a clear, distinct move above the top, which I wanted to have happen. But then I realized when it didn't come back down all the way, there was a possibility it could go even farther based on that setup. This is picking higher trajectories to go off of. Okay. So the question is like, all right, if this doesn't have a rebound today or tomorrow, and I'm going to get to this wave right here that I mentioned, which would lead you up to like 348 potentially by the end of the day today, which is kind of crazy, or tomorrow. There's a possibility it takes till Thursday, but after that, I think it's pretty much dead. I mean, if it's another Friday thing, whatever, but I wouldn't necessarily be able to predict that. But the setup has a decent chance of having a wave back up to 340, which makes sense for a couple reasons. I'm concerned about 335. We'll get to that. That's like short-term wave count here, or wave direction, I should say, not count. So anyways, the real like sort of question mark in my brain is, everything's not always symmetrical with iterations. And when I look at this, you might say that, yeah, like that looks pretty symmetrical. I mean, it does. But remember when we were counting it, we were really counting into not this point, which is the low. Like we weren't looking at this as like necessarily like a right side. Remember, this is where things get kind of tricky. Okay. Because if you think about this as like the middle, and there's a point to saying this. Okay. If you think about this as a middle, then you would also then be measuring everything from this middle out, which is what I just did. Is that a fair assessment? Can you do that? I mean, you could have done it here and it would have worked okay. But remember, when I was doing iteration counts, I was actually looking at it into here, which is quite different. Why did I do that? Because this is actually where the break is. Nothing changed here. There wasn't a pushback up, right? But there's also a pushback up here, So if this were the same as this, then it's not really appropriate to make this the middle, is it? That doesn't really make sense. So what is the iteration then, if it's not this wave, this S-curve down? Well, like I mentioned, this is important because it's clearly a wave cross, and it is symmetrical in some ways. So I don't think that it's wrong to like use it. If you were somebody that saw that and you were like, I used that V shape and that W shape, and I used that to help measure, great. Like, I don't think it's wrong. I think mathematically it probably worked out for you pretty well. And I also think that's just the nature of the market, having these kind of interesting overlaps. But if we're looking at this as like a walk up and breakdown, we wouldn't say that this is the pivot point. We would instead say that this S-curve is met by another, which is right here on another walk down. And this is the way that I did it when I actually did the iterations, because we're working on trying to determine when did it change character. And it changed character here when, after doing a rebound, it no longer goes lower. It doesn't make a lower low, and that's significant, right? So what this enables you to do is to kind of cut through the noise a little bit and have a more succinct, I suppose, understanding, would be a way to put it, of perhaps what is the truer iterative nature here on the downside before this reaction. Now, this again dynamically changes what you might say this is the middle here on this bottom, and it's just working out, as opposed to, well, this is where you're having like a drop down and a drop down and a drop down, and you're kind of pushing. This is the primary reason why I thought this was what I thought it was. Okay, because again, if you're tracking the right thing, you're not really looking at, oh, this is working itself out necessarily. in a mirror, which is fine. Again, it worked out. You could have said the same thing back here, right? And it wouldn't have worked out. You know, if you had looked at it back here, you could have said, well, I think this is going to work itself out like a mirror. And it did in a weird way, right? But it also didn't, because it went like super low. But you could have said like, well, I think it's going to do this back here. Well, to some degree, we thought it might come up to 4, but I never thought it was going to like break back out and go up to like $6 or something back here. That was never part of my TA, because it didn't make sense, first of all, but also because that's not a real accurate way to do anything. Just kind of making these big, broad guesses. So you could have done that back here and made a big, broad guess that it's going to do this or that. But the better way to look at this would have been like, all right, we're getting retests here, right? And that is an iteration. Okay, that's a kind of iteration. It really goes to like here where this guy plateaued. And then we're getting retests here and so on and so forth. You know what I mean? And you can see how like when you go forward, that makes more sense as a method of measuring down. And you can see the reductionist nature of it as well. It becomes this very simple equation of shrinking iteration, those steps down. And then you do that in combination with volume, and you say, well, when did it change character? Right here. Like it quite literally jumped back over. You can see it visually. So the reason this is important is because you have, at this point, you kind of have like this way of understanding the motion and seeing like what could happen and where would those motions lead you if you continue back to the upside. Well, we've already kind of run into the first big question of the day, which is like, well, what's happened to the upside? Has it changed already, going backwards? And I think the short answer is yeah. I mean, it's already kind of failed here. You can see that, again, like looking backwards, you're like, well, I don't know why it would come down to 290s, Booksy, that's really low. Well, I mean, it failed here. It didn't hold above. And then even if you had thought, well, I think it could hold here, right? This is right where it drops off again. Then it failed again. So how is this possibly bullish, right? If it's not even holding up on the most basic level on these kind of S-curve drops, well, again, it's a kind of a subjective thing, because I could be looking at this from a helicopter perspective like I am and picking out the drop zones, right? Like this is the middle of the S-curve. This is where it dropped down. It's a pretty strong level. This is the same thing right here. This is the middle of the S-curves where it dropped down. And we could be saying like, well, it just needs to hit $3 and then it's good, right? And then this guy would be an example of that, where it's like, well, it just came back down to, it did advance, right? It came back down to 270 and then it took off. So really this is just the same thing, right? Maybe, it gets to this point where you start going back and back and back, and you do end up with the 461 as a likely next target, which is appropriate. We found that a couple different times. So there's certainly a way to, I don't want to say like cook the books here, but there's certainly a way to, I guess, to sort of do this in a methodical way that does yield like a higher move, maybe by default. I don't know why I moved that one up. But I would just caution you about this kind of approach, that this doesn't necessarily mean anything. I think in 2000 and it doesn't mean it has to go there. In 2020, there's a similar walk down that occurred, but the final one isn't hit, and because it's a breakout, if that makes sense. So the final kind of topping motion would have been, or that dropping motion would have been really the original drop-in, which for us is quite high and would probably represent this level here. We're not quite there yet. It's like right here, like the 650s area or something ridiculous. Because we could keep going backwards, right? We could keep doing this like over and over again. Maybe even as high as this guy, which is like 1014 or something. We wouldn't want to go that far right now. But my point is that like you could keep going backwards on this and saying that it's just going to keep doing the same thing. But then the spring has no place. And if you go to 2020, 2021, there are some that are met when that comes up, in that November time period back then. There are some that were met, but then there's others that just aren't right away. And it still goes low first. So it's not like the outworking continued. It just didn't. If it did, you would never have come back down, after that original move. So what then? If you don't have like an exact way of understanding this, you might be like kind of lost. Like, well, what does that even mean then? Well, remember, it does come back up and hits these specific levels. And it does so in a fairly even increment, right? Back here. You have to, again, go back through and sort of like find them, right? And in this case, they're pretty evenly spread. It's really like a 1, 2, 3 motion. The change of character is extremely subtle, right? But we would even go as far as to say, like, we'd have to be looking at iterations that are even smaller. This is kind of a different setup in some ways, like right here on the drop down versus this drop down, that kind of thing. It's not as vertical either. So we didn't get consecutive lower lows all through here, right? Especially in this area. So there's an interesting kind of dynamic of where this is more boxy. The second moves are a lot higher, right? But we can see those moves all the same. We can definitely see them, So there's nothing wrong with like identifying them and seeing those moves, but you kind of have to like take it for what it is what I'm trying to say. It's not quite the same. My point in being is that if this had continued to iterate out just because it made that first big move up, then this would have not made a lower low because it didn't right here, right? It kind of pushed higher. So then the next iteration should have pushed higher, right? But it didn't. So is this just an error of how you look at things? Is this really an inconsistent way to look at things because the rules change or something? You can't guarantee the rules all the time. No, I don't think so. I think it's just about using better judgment and not assuming that you know everything that's going to happen. And also just recognizing like what was the point of this on the big picture. Because if we were just trying to catch this bottom here in November and we were doing that and we said, oh, it changed character or whatever, and we had figured it out the same way, it wouldn't have mattered. We still got the move up, the 40, 50%, whatever that was. Just like here, it's like, it wouldn't really have mattered. You still get the move up. But to kind of keep measuring it and keep trying to determine outcomes, that's the challenging part, right? So when I look at this, I think that it's entirely possible that you could come to a conclusion even that there's supposed to be some other kind of bigger move here. And I think there's probably even enough evidence to suggest that, shoot, I could think that this comes all the way up to 620 before anything else happens, right? If it kept doing the exact same thing, then why not, And then we could come back to here, and that's the move. It's like, well, sure. You're really just taking the same idea and just expanding it out. The question is, when does it stop, right? Like, how far does it go before it kind of changes character? And again, had that happened in 2020, you would have just had it keep going up. It would have went all the way to the top there, and it didn't. So we're kind of left answering the same question that we were answering before. And I'm not saying all this to kind of go in circles, but just really just sort of stress this idea that, it's true that there are these walk downs. It's true that they're iterating out, and that certainly looks like it's a possibility that you could have a final push-up. But I think that you have to just sort of take into account what's going on here and whether or not that seems reasonable. So for some, they're going to look at it and say, yeah, it's totally reasonable. If it goes up, it's going to break out. It's not going to come back. Or it's going to break out, and that's going to be the end of it. It's not going to go past 6, so on and so forth. Like, those are kind of the motions that maybe some folks might look at and say, yeah, I think that's what's going to happen. For me, I look at that, and I'm like, that to me looks like the breakout one, right? Like, that's the one you're going to go up and when you leave. And I think that's appropriate. And it makes a little bit less sense to me as as just a widening here that then still comes down again. But to me, it makes sense as the area you leave. Like when you do jump, are we gonna just like jump the creek and go? Yeah, but it would make more sense over here to do that in that time. So I look at it as it's not wrong to track iterations and to think that they're outworking, but then to just kind of remember like this can be left for its own devices. And if it makes more sense later on to use this as an exit path, then so be it. In the meantime, you're really looking at these resistance levels and saying, well, it's checking these one at a time. And arguably, we could go through a few different ones, but arguably, like this is maybe the one that could be in view, is that guy. I think, again, looking backwards, it would be hard to say that this hasn't already happened, in some ways, because notice that here on the middle, this actually goes back as well to the previous bottom. Now it didn't happen here; it just went back to the middle again. But certainly, you could look at that and suggest that, well, then this was the place it was supposed to terminate at 410. That's the previous bottom and the drop zone. The previous bottom and the drop zone. It seems right. Maybe, obviously this goes way beyond it. And then there's a question of like, again, what happens after that? So if you look at the first iteration, this was the one that changed my mind. This comes up above the previous LSPY, and it changes the direction. But again, that's because it's confirming that it's going to go up again. So this is informing itself. It's not just informing like a bigger picture, which would be maybe an inaccurate way of kind of ascribing that information to something else. Instead, this is pushing up here, which does work, right, as a signal because, again, compared to the previous top, it made a higher top. And it pushed up above that LSPY that happened right here, which was the middle of the S-curve, which is also a cat ear, and so on and so forth. And that signified you're going to have continuation, which we knew. Okay? This has yet to push above this at all, and it probably won't. So again, if it went up there, wouldn't it signify that it's probably going to continue if it pushed above this top? Right? I think it would. But that's also be looking back here saying, yeah, I mean, that's what happened here, and it did. So the question marks keep going from there, but you could say that, like, again, did this make a higher high here? Did it push above any real top? No, not really. The only one that's pushed above is this guy at 378. And again, you're kind of looking at this from that filter saying, all right, well, what does that mean? Doesn't mean like... because of where these are, it doesn't necessarily mean anything. If this had only pushed above that top right here, you could say that there might be continuation, but because it goes above this top, it leads you to the next. So each one kind of brings itself up further. So resistances being pushed higher could signify that you're going to come back up and break that resistance again, or that you're going to test it again. All that we've done here is we have pushed this resistance, but we didn't come back above the middle. I think that's really curious. That's different than what happened here. So let me repeat that one more time. This is a change of character, basically, is what I'm saying, on the opposite side. Because it didn't push above this 412 area, did it? No, it didn't. Whereas here, it does push above kind of that middle, right? It does push above that bottom area. This really struggles, and it doesn't quite get the move. So there's a little bit more weakness for sure there. There's obviously a big sell-off. We get that. I would suggest that it's a kind of a self-fulfilling thing here, I suppose, on my part. But I would suggest that it's probably then a change of character, and that this is indeed like forming a topping action here, and it doesn't intend to go significantly farther in the future, right? As opposed to an advancement that really pushes the limits. If that makes sense. Maybe. Again, if you continue to kind of take this iteration outward, and and I don't think that's necessarily the wrong approach on the whole, but if like it could work out, I guess one day, like you were doing this over and over again, you might say like eventually that works out, right? Eventually it's going to do that. Yeah, eventually, but you're not identifying maybe the right signals perhaps when you do that. You would suggest that essentially like what this is right here is this bigger picture, and that you're going to get this kind of macro like pump move that goes way over the top, again like at $6 or something. I believe that there's probably some decent evidence it could happen, but like that's probably what's leading a lot of bulls to believe that yeah, this is likely going to happen. And what that would look like is that this backup essentially comes back down to this level right here, just like this one did. So now we're comparing this area from May 15th to this area right here, which is where we currently are. And you would say that, well, this made an early advancement, but didn't breach that top. And then it pushed up really high all the way above, right? And that's what we're going to do right now, so on and so forth. We can play that out and see what happens, but just eyeballing it, what it seems to me would be that you're suggesting is that we're going to go way, way up in the next move, right? Because again, like the way these things are directed, it's based on a number of things, but the way they're directed is typically by like bullish price action early on. Would that affect it because of June? No, I don't think. I said Thursday, Friday, but yeah, I guess it could be Friday then if Thursday's not in play. And I said I didn't think it was, but it was Friday. But so yeah, you've got this issue of consistency, and some things are highly consistent, some things are less consistent. But on the whole, I think that this is an appropriate gauge, what we've already kind of done, for understanding like price movement, maybe moving forward. Okay. So if you were to look at this and you were bullish, then the expectation would be, I'm going to just finish the thought here. The expectation would be, if you thought it's going to do the same thing, that you would basically be comparing these two bottoms, these two tops. The next motion would be a massive push above. Should be this middle. It may even be a parallel. So here's your hopium for the day, I suppose. I don't even know where you'd put it. It'd probably be here. It wouldn't actually be the tip because that kind of works. Because it would be back to where this had a bottom action. Actually, it should be this guy. Yeah, it's this guy right here. Well, it is there. That's something. I guess it's noteworthy. It's there. So your next action would basically be to land here around $3, and then it would propel you all the way up through this top. Again, this is kind of confusing, let me think. I don't know if that works. It'd have to be above this top, but I already did that. So again, it's like it's not quite the same. Basically, this would go all the way up to 368, and then it would back up. I can't imagine why it would go that far though, and then back up. It's confusing. That far again doesn't make any sense. Yeah, I think it's kind of busted. I figured as much, but yeah, basically you'd be pushing way up here and finding supports super high up. But the reason it doesn't work very well is because it already overextended over the top here. So it's like, that's super far backwards. It almost makes no sense at all. Yeah, I kind of destroyed my own thesis there, but that's good. Actually, it's a good thing when you come to a dead end sometimes, because it means that maybe it's not the right path. You shouldn't be taking that. So there's a lot of little questions in my brain about the about that assumption. Like, I don't think it works very well. I'd probably have to kind of work it back out again on like a clean chart. But it would indicate that you could come up really high. I guess the conclusion there would be that this would come up particularly far. Again, it just sort of like skips over a spring. That's all there really is to it. It's probably that simple. Yep, I think it's that simple. So if this were to continue to break out, it would basically just keep doing the same thing, and it would skip over any kind of spring motion. I'd hate to say that this would be good though, because I think if it did that in that manner, it's much more likely that this is not going to end well long term, because in the end, though you would get this kind of swooping motion back up here, you would push up. I'm like looking at it, trying to like literally put it into that same bracket, and I think what would happen is it go up to here, and I guess it would come back to like 4. It'd have to be on the top of the range, which is really low. That's what I'm saying. That's like 375. So it'd like go up to there and then come all the way back to like 375. And then it would push up really, really far. It doesn't make any sense. That doesn't make any sense. It's like a super widening, basically. It goes up to like 6 something. Yeah, I can't see that boding well long term. To avoid the spring and go all the way up instead. Avoiding the low is not good for bulls. Some people think it is, but they're not usually right. Anytime AMC is avoided going low on purpose, you can tell it's avoiding going low. It usually ends in disaster because it's a distributive signal. Like, we're going up to sell a lot more shares, and then later we end up crashing through the floor. And I don't know about you, but I don't want to be coming down, crashing through 250 later in some kind of dramatic motion. I'd rather do it now in a more controlled spring and come back and retest. But yeah, it would have to come only back to like near 350, which is super low. So basically, the implication here would be that you would come all the way up, you'd push above 567 or whatever that high was. I can't remember at this moment. And then you come all the way back down to 350. It's a super big swing. But that's what it would be, because it'd have to have like a 618, near 618 retrace, and it'd have to come close to this guy, this parallel. Then it would have like a massive advancement by comparison. But this is where things get kind of dicey, because then it goes to, well, where does it go then, right? It's like, well, frankly, there's nothing really else there. The next one up is like the same spot, maybe slightly higher, maybe that $7 area, $6.20 to $7, but that's it. That doesn't get you over the creek. So that's not really what you want. And then it's a big crash, in my opinion. That's not what we want. Well, we can do more on that later. Let's not waste their whole day talking about that. So what I'm looking at locally, so I guess there's a bull case there is what I'm trying to say. But I think that it sort of jumps over, it skips over maybe some other information that could be really, really important to consider, which is, again, if you're going to have a spring, it has to go in here somewhere. You wouldn't just like go all the way back to the top in order to take it down for a spring. What would be normal is to go all the way back up to the top if you're going to take it low and keep it low, which is a different story. It changes everything, right? In some ways, it could change everything in a bad way, I suppose. For those of us that wanted to go up in the future, that could be very detrimental. So in the short term, though, I think if you were going to do this as a spring, you don't have to go significantly high. I think you could avoid doing all of that high business at like 6s in order to come down and stay low by staying in the middle here, like not exceeding this range center point, certainly not exceeding 461, which is the more classical bottom here. I mean, that's the one that to me is like, I could definitely see us checking that and being safe. I think beyond that, you're really pushing into high distribution territory. And just for the record, we did that here. Remember, we went all the way back up. This is where the change of character happened right at 460. We went all the way back up to the top, and like it results in this massive slide way below the range. So when I look at it big picture, I'm like, I don't know why you would want that to happen again. Not here, you know. You would really just have to be going and just keep going. You couldn't stop. So the iterations kind of stop working there unless you're going to keep going. So I think the interrupting factor is the same. Okay. Why did I choose to address that right now? I don't know. I was thinking about it yesterday. I was thinking about how there were some folks that said that they thought it was just going to keep going. I was like, well, I could make a case for it, but it's really difficult because it turns into an extremely bearish setup very, very quickly at this point. If it doesn't go down for a spring, if it goes up instead, it causes even more chaos potentially in the long term. So at the moment, I think what we're doing is actually quite appropriate, which is to think about this as like there's a potential here for another upthrust. It could go quite high. There's a range, again, that's building. We can tell, just like we could tell here, there's this kind of swing around range at the top that's building. There's definitely a chance it could go up as high as 461. That doesn't put it too far, right? It could still hit that and then come down low, but it doesn't cause this issue where you're going all the way back up and generating like a quadruple top, basically. That would be extremely negative, in my opinion. You have to imagine, like, going back all the way up to the top here in reverse and having that kind of build out without having like any continuation. If it did that, you would have a bad case that this was like an inverted spring action and that you're really going to leave the range to the other side, like this direction. You just drop all the way back down and then be done with this range here. That's not what we want. We want this range to complete in a bullish way, which more often than not is not an LPS but a spring. So it could go again back to that near that top area if there needs to be a little bit more distribution, but it hasn't pushed the top yet, right? That could give you enough sellers to bring it down to a spring, but then it reverses and it leaves the range this direction going up, which is what we want. I could definitely see the opposite being like an inverted spring, which is not good. It may seem like a stretch, but really, to me, that's like kind of obvious, you know. That could cause some serious problems. Better to finish what you're doing down here and get it over with than to try to take it up, avoid the bottom. And that really would just be to offload all your shares through the range again. That's a markdown. as opposed to a mark up when you're going the opposite way up. Okay. So I'm still going to sort of lean on the bear side here, short term. Okay. But what does this talk about like a short term pump then? Again, we don't know exactly what a distribution looks like. All we can do is, like, we know what it should look like in the end, but there's like a few different targets. And the main thing that I've been focusing on is the 461 and 4 target. There's the 390, which is, it's kind of more like 385 at this point. It keeps going lower as we move along here. That's also a spot that you could get stuck for a secondary motion up. One of the easiest ways to look at this is just as a hook, though. So if this is the S-curve down and it's shallow and it doesn't continue as far as maybe we think it should go, meaning that it's kind of like finished, it doesn't do like the extra leg, which again goes down to about 3, maybe even as low as 270s, right? Depending on how you measure it. We just did that a minute ago, and it can go quite low, right? This is potentially as low as it goes, like way down here, very far. All right. So I'm drawing it this way. Someone else could take a step out and say, oh, I think it's going to go all the way down to here. Certainly bears that are really bearish on this probably are wanting it to go down that low, you know, go ahead and get their money, so on and so forth. So a shallow S-curve in this case breaks back above this top at 364, still the same level, and nothing has changed there. What was interesting to me was I was looking at this, again, yesterday. I was like playing around with the bull side a little bit, and then I started looking at the current setup. And AMC, to a little bit of a lesser degree, GME does right here. And it did not go that low, which is fine. It came back and retested this top and didn't break it, which is fine. This one ended up being pretty much like I drew it out so far. I thought it might drop low again because of where it was positioned. So this little range is a bit obscure. We're not really sure. If it makes the advancement up, it could be quite bullish. It could be a reversal. Come back above this 1 hour EMA. The 1 hour divergence would be kind of completed as a bottom. You can definitely see that lower low there on the price action and the higher low, right, in both the MACD and the RSI on the hourly. That's not really super surprising, though, if you know the overall pattern, which is it's kind of like an inversion pattern of sorts. If this breaks down, it does the final leg here that you see, this guy. So the top finally breaks down. So this motion would be quite violent. Again, taking you down to near 270s. That's the final leg right there. Okay. But if it reverses, it's a pretty simple, straightforward thing. And I was saying, like, the 315 is a really good place to kind of see that potentially happen, because that's the first inversion. That's to be the first change of character. It's also the first place you could have a bull trap, but it is the first change of character for sure. So looking at it as a shrinking iteration down, M cross with the drop ledge, this is the next drop ledge. So we were just talking about these a minute ago, but on the bigger picture, this motion right here, that 315 area, I'll delete this and redraw it so it's a little cleaner. I'll show you what I'm talking about. This would be the first reversal because it goes above that drop ledge. Is not a hook. It fills the gap, sure, that's fine. But it actually reverses because it goes above there, right? It's a wave reversal. It's not continuing this S-curve down. Instead, it's basically saying, no, we're going back up. It's a bear trap. And this is the first place you could have a hook. So naturally, if you're looking at this as a bear, you're thinking it might go up here and then sell down. That would be where it could go. The second place that you look for a bear trap, or excuse me, a bull trap, would be here. So going back up to the next marker would be this guy. Now that doesn't actually get you out of the woods because, again, you have this sort of rising I think they put it right in the right spot too. It's probably going to end up being pretty well triangulated. Yeah, right there. So this could put you back in there where you fill the gap and then you drop from there. But just like here, this change character goes up to the next one. What happens if you change character here, right? And you go up to the next one, you don't go back down. Well, again, if this were to exceed the top and came back down and sort of landed on top of this, and it had to do with some strength, you know, you probably have to see this come back above at least here, typically. It's 338 area. If this came above here and then came back down, just like here, it's a change, a character again. That's the wave. If it jumps back above it, you've got some serious strength. That's a change. So just like here, there's kind of like a double whammy of like, oh, well, the expectation is that this could basically stop short and then have this really massive drop to the downside, which probably does lead to like 270s. It finishes the S curve. The inversion here is where things get really interesting, because if it inverses, right, that motion, and you get that pop and this reversal, and you, even if you do it just to go to the next one and form a bearish hook, which I think is kind of curious, this starts creating this like kind of a cataclysm, what's the word? Like a chain of events, so to speak, chain reaction of upside to upside to upside. And now suddenly you're in the final motion and you're looking at kind of the macro move and you're like, well, where's the next wave, right? Well, probably here. And this is how you get to that final move. So this is actually a really good setup for a potential huge reversal. That being said, after this, you know, my expectations would be pretty short-lived. I think after that, I think you just go back and say, yeah, you know, what's next is probably pretty straightforward. We could keep going on sort of these bottom things, but basically like this already broke down right here. So the next one up would be potentially all the way up here, like 461, right? That's sort of like the final leg. So that's how you go to the upside. This could be a huge move potentially, which looks almost like too crazy in some ways. Short term, I was saying that there's almost like a, not a guarantee, but it's a high risk play. But short term, there's a move here that works in our favor if you wanted to trade it this week. And I was saying, like yesterday, I think this could trade easily up to 345. The reason I'm seeing that as likely, you might see this kind of wave right here and think this is just a bunch of gobbledygook. And to some degree, it is. But remember, if this is the cat ear, and I think it is, then this is also a paw and an ear two, and the ear two itself is a paw and an ear two, right? So I got the paw and the ear two here, paw, ear two here. Remember, this is the pattern. So people say that I don't do like fractal stuff because I don't like it, because I don't like it. But I think that when you look at the quote unquote pattern, or the, I call it like a master fractal, whatever I call it, that thing is still present here. This cat ear is still a nested structure, which means that you also have one here somewhere, right, in this breakdown. Now on the hourly, it's kind of tricky and it's really hard to see perhaps where that is exactly. So I'm not going to gunk up the chart with a bunch of stuff, but typically you're looking for the first M cross, and that's fairly self-evident here. There's only two spots. One is this guy. You can see that first push. There's a reaction here. It's clearly like a double bottom of sorts. And then there's a drive through, drive back up, and then it fails, right? We're getting into shrinking motion. It's very difficult to track. But ultimately, if you pay attention to that formation, you should see it. Like, where is the ultimate like rejection point? Right here. This then becomes a sort of a whip around. This doesn't really respect anything. These two, it's like a thrust down, thrust up motion. But ultimately, like this motion right here and this motion right here. So this is a way to kind of identify it, maybe without looking at the nitty gritty on the micro and say that this is a probable point of interest here and here. It's the most likely spot. And then the rest of this is just a bunch of up thrusts that are failing. Sign of weakness right here, right? Reactions, so on and so forth. It doesn't have any kind of reaction back up, so it drops back down, so on and so forth, right? So in the end, these 2 points become my focal point for a wave cross. And where I put it, at first, I put it kind of like on this low one, but that doesn't really respect everything else. I think when it left, it anchors on this lower one on these whips, but the best one, and I'm gonna snap it, is these first two. They're basically identical. And then you can see like this does push over the top a bit, so you could use these two as well. Notice that like in the end, it's not really changing too much in terms of like where it's interacting on this edge. Pretty much everything is like right here in this pocket if you look on the right side of the screen there. So even if I move this to like the lower portion, everything here is like directing it to the same area. It's really like there to, I think, here. That's not really much diversity there. It's very, very much all in the same spot. So I was looking at that. I'm like, yeah, that's probably where it is. And as a result, when I look at the big picture, this is like a macro wave down. And I checked it out and I was like, yeah, that fits. That fits the bill. This goes right through kind of the middle of it right here. It tried to use this as a support at 331, which is definitely coordinating with this idea that it may come back up. Again, from where that drop ledge is to near 331, that's certainly the right spot. In fact, that is actually like the opening value or whatever. This last little candle is right on the nose there. So I'm like looking at this like, yeah, that makes sense. That's a midpoint. What that means is that now we have a wave up, down, and then back up again would result in a wave action that goes back to this top on the channel. If there's any kind of bull strength at all, it would go all the way up there. If the bulls are really weak, it may not. It may fail. But if they're strong, you should have a good push, and it should go all the way to the top. So I said in the Discord, I said, well, it's a high-risk play. There's no guarantees. I hope you all understand that. But I said it's a pretty simple play that this should have some amount of strength. And there's really only a few different markers here that I would even consider. But as you can tell, Friday is kind of the latest, and it goes up to 343. So is it possible that, you know, it delays and just chops down here and doesn't come up? Sure. Nothing's impossible. It could hit 339 on Thursday next week. You know what I mean? Like this is like super low. So no, I'm not saying like there's no other option here. There's a ton of options. But in terms of like a 1 week play, it's a pretty simple one. It seems like a strong chance that between now and next Wednesday, which is 1 week, that it's going to make about a 10% move to the upside. So that's where I'm hanging my hat today on this. And I was looking at that and I was thinking about GME. GME, they're offering maybe going through, I guess, today or something. If they announce it's done, I don't know. I was really just looking at this more as a reactive move. Does it have the M cross up? Does it come back and check the creeks? I think it did. This is like the lowest one that I had. It did that here, but in this case, I think it came to this higher one, which is fine. It's not a big deal. It needed to move up to this range, SOS, and then it could go. Actually, it's better because it held that higher one. It's a little more parabolic, perhaps. We'll see if it stays strong. And I think that there's a likely chance this is going to react back to 25.50s first, which is the first creek here. Once it reacts to there, we'll see. This is maybe a stopping point. If it does it like today or tomorrow, it's certainly like a good place to chill out. That's again a 10% move. It's pretty big. So you can see how those two might work in coordination if it can get that move. What about the rest of the market, Booksy? This doesn't happen in a vacuum. I don't know, man. What about it? You know, we had talked about, you know, potentially, anyways, that SPY would have this kind of final leg up. And it didn't happen quite as I was expecting in terms of timing. But I had said that I thought, well, it has this sort of a embedded weakness in the, there's kind of an embedded weakness in this RSI right here. And I was saying, like, I don't necessarily think that matters. It might still make that final push up right here on weakness and go as high as maybe 611, which is pretty close to the all-time highs. It's not quite there. You know, I think there's a weird little gap right there at like 612 or something. I had suggested that it may be sooner than later, you know, if we can hold one of these supports. And it held up. It hasn't dropped yet. Has it made a higher push yet? No, but it did jump the creek. And so right now, is it still possible? This takes a few days. It's possible. It's also possible it just takes off on some news. There's things that are going on in the world that you can't predict, you know, and, you know, could definitely change the course of direction here. This could end up being a big hook if that's the case, in which case this would come back through the creek here, and it probably would look pretty bearish, and then we'd see what happens. But I'm looking at it now, I'm like, yeah, it did make that reversal move on weakness. I still think if it goes up, it's going to do so on weakness. So the first target that I had in mind was here. This is quite literally the opposite. I mean, it literally was like the backwards motion, right? That was like a pivot point. The second one is going to be here. Now, this did reach up and hit it already, right? So it's already kind of met that. And it's failed. So really the timing here is, I wouldn't say it's off, but it's like another 6 days potential. And then you're pretty much out of luck after that. Because if the pivots end up just being these kind of reactive up thrust moves, you're already in a distribution at that point. So any high that you get is all you're going to get. If that makes sense. It may not make perfect sense to you, but what it would mean is that, like, basically each of these waves, if you were continually a pivot, you'd have these like up thrust, right? And then could be really low, could be high, but you'd basically be in a distribution where you're trying to get up and it's like failing, and then it ultimately craps out and goes really far down. That's where we get the really volatile tops. And it may happen that way. I've already stated I'm not trading this to the upside. I don't think it's worth it if it's only going to go to like 610. Someone had asked me, they said, well, I just think the market keeps going. Where do you think it goes if it keeps going? And I said, there's evidence here that suggests you could go up as high as 650. If you look back at some of these initial directives, it's not impossible. I think 635 to 650 is possible on some kind of a huge burst of news or something. I find it to be less likely that happens before a correction, unless we're planning on just tanking the market again after. If you're planning on running the market, you know, going into August and October, which is kind of backwards. Usually the market goes the opposite way that time of year. You might see that earlier drop. I think that makes more sense. Given the July 9th is the due date. I've been saying the 11th, but it's the 9th. The 9th is the due date for those tariffs, and they've largely been unsuccessful in negotiating deals. They've had like 3, I guess, that have been publicized, and then a couple that are in the works. They said that they've obviously said there's a lot in the works, but that we've seen, there's not that many. By comparison to the, I don't know, 100 or whatever that they threw out there, you've only done like 5 to 10 of those and gotten solid deals. And I don't really know what anyone's expectations were. I think the market's not made up of a bunch of dummies. Everybody would have been aware that these are things that should take years, not a few months, not 90 days. Nevertheless, the market's taken this 90 days as an opportunity to kind of come all the way back up and probably, get these positions back in order from the beginning of the year, which was kind of my argument, was like going back towards January levels near the 7th. And I think to a large degree we've already done that. I mean, technically this was already beyond it, right? This was at 586, So everything else from here on is, again, probably a bonus, which is why after we hit this mark and we pushed up again, we saw weakness in the markets, chinks in the markets. I'm not of the opinion that this is particularly strong yet. I'm not of the opinion that it looks super bullish. I don't know where exactly that's coming from other than it's already running, and you get really used to upside and you don't want to see downside. But the truth is it's not going to take very much. This is kind of like a, sitting on the edge of the table like a needle. I mean, it's very much a precarious situation. There's not much that would hold this up, and it wouldn't take a lot to drop it, is what I'm trying to say. Just based on the way this is set up, the volume and the weakness that's present. And my thesis is already contrarian. Like me saying that I think it still has another run or a leg up to the top, that's already, in my opinion, like going against the greater setup here. Like I'm basically suggesting that it's going to have a UT here. And the basis for that is a lot of things, but there's, on the whole, like the big picture, it still looks very bearish. This is a double topping action. This is rounding, which is fine with the rounding RSI, which again, that's why you might say, well, there's some technicals there that support maybe this bounce up, that this isn't actually like the top. There's going to make another top. But on the whole, this is a higher high with a lower RSI high. That's bearish divergence. Typically that ends badly. The market's done this before. It did it back here. Did it repeatedly back here. So here's an example of a bearish divergence. This did not end well. Ended in a pretty sizable drop. So if you were trading that thinking that it was going to go up right there at the very top, you would have been down. A big 5% correction there, and then it goes up again. And again, like on the big picture, this was actually bearish divergent, even into the greater tops. But then the smaller top here, same deal. So there's just all kinds of problems, right, with this previous top, where it was just not looking very strong. Now we don't have, aside from this first low here, we don't have a lot to go off of in terms of SOW, right? If we were looking at this the same way, we would suggest that maybe it pushes up again. And that's what we're really talking about right here. We're kind of looking at this area. And I'm saying like, yeah, it's got this potential here to have a stronger reaction up. But if you get to this leg and you've got this kind of 1, 2, 3, 4 motion on the top, we've made like at least 2 of those, maybe more. I'd have to look. And it's still like struggling right here. Then we're really just looking at a repeat of maybe December 2024. I just think that's what I'm saying. I don't think the risk is really worth it in this case. Yeah. So that would look like, again, I was saying like choppy motion. Maybe you get a higher push, maybe not. But then you basically crap out, and that's the end of it. That's bearish. If you see something like this forming, you've been warned. I'm warning. I'm trying to do my best to warn you, because that would be pretty much exactly like what happened last time. And then you can go backwards and look at that top and say, well, how far is it going to go? I don't know for sure. But last time it did come all the way back down to this this widening, which would be, again, us coming back down to here, which is what I have on the chart already. Like a drop down and then reacts back up, back down. So just a quick bounce out and then comes back low, real low. Perhaps by that July deadline, if it's bearish, or perhaps it just waits. I don't know. Uses it as the final drop down. I don't really know for sure. This is where things could change for better or worse, perhaps. So in the short term, is there a possibility this gets a little bit of that chop to the upside as opposed to going down? Yes. But on the whole, do I think it still needs to correct? Yes. I don't think that it makes a lot of sense to consider this as like super bullish just yet. And there's some people that are already kind of saying, well, it's going to go, keep going, keep going, and keep going. I'm like, meh. I mean, I guess you can ignore some pretty simple signs, but when it starts accumulating, it gets challenging, you know? So I think there's a chance that we don't see something like this, where it just sort of chops and drops, but instead we see sort of a rising momentum, right? Like this. We got some notoriety. Got a flat earther in the chat. He can believe what he wants to believe, but you can do it elsewhere. Because this is not about that. This is a stock market channel. Off topic. Spam. That was fun. Yeah. So I'm comfortable suggesting, I guess, that this could have that kind of last minute hurrah, but then I really don't see how that changes anything regardless. I think you're still coming down. Yeah. You never know. Something could alter, I suppose, what happens here. But for now, that's what I'm going to go with. So does this give you any kind of does this give you an understanding of where I'm coming from with AMC GME with these kind of moves being not like permanent, long-lasting, forever moves, but really just being there as kind of a last-minute like hurrahs, right? So if we get a rally into the end, near the end of the month here, the next week, depends on, I guess, what happens in small caps, perhaps as well. But this was what I was talking about on, I guess it was last week, Thursday or Friday. I say that a lot, but remember the build out and when we were talking about the May move and how that was like this last minute move, that there was certainly like a lot of big pushes there early on, but it wouldn't really budge until that May 15th, 14th area, and then it just blew up. So it had set up this nice bullish bottom on AMC, but it had advanced, but it hadn't really broken out, really gone far. This is very different because we've made it in increments. It wasn't all in one move. It happened in like a repeated series of upthrusts. And certainly the argument is very much real that this could just kind of come up and die here at any of these levels going up. But I'm saying it's definitely a possibility that that happens. But at the same time, there's this sort of I guess a curiosity on my part. I'm like, well, if the market's topping off and AMC and GME haven't kind of finished, I wonder if there is some kind of final big move that's still left in it. I think it's a possibility. I really do. And I'm not just saying that just because. And then it brings into question some other things. I was charting a lot on Apple, and I was saying in the Discord that Apple to me is like a powder keg of possibility. It's an inflection point. It's a place where it's got to make a decision, and if it goes to the upside, it's gonna be pretty darn crazy. With all the things coming down the pipeline, you might say, well, that doesn't make any sense. Like, why would it do that if the market's about to drop? It seems more likely that this would have like a final hoorah here and then just kind of like crap out like everything else, going into the end of the month. To which I would say yes. And I actually had a version on the chart where this iteration did that. It basically went up. I'm going to do it like this. It bounced out and then it essentially went sideways. Now I had it a little bit higher on the chart, remember? But I had it like on here and I was saying, yeah, there's a possibility it kind of just craps out sideways and then perhaps even goes down, right? This is certainly a possibility. And then you're going to be kind of rife with downside, probably back to this area around 174. I mean, it's going to go pretty low if it drops. I don't think that's like an opinion as much as it is just me looking at the waves saying, yeah, there's not a lot to stop you if it drops beneath that level. But I have to say that there's a good possibility if we end up with this kind of July 9th setup, there's also a good possibility this just keeps iterating, right, and does it again and doesn't actually go low. I can't tell you maybe every little piece of this, but I can tell you that this is a very strong setup. And if and when this thing goes, and I think it will, based on the technicals here, yeah, it could come down again. So don't hear me wrong. That's certainly a possibility, especially going into the 9th. If nothing changes, Apple stands to lose the most with, a lot of these tariffs with China. Compared to others, they're more exposed, right? Certainly this could be a really nasty drop here. Nobody's saying that's not possible, okay? So don't hear me wrong. But the setup itself, this is really bullish. This motion right here. Now you might say, yeah, but isn't it like trading really, volatile and high, I mean, there's obviously like these problems where you said if it avoids going low, it could be bad. Yeah, but in this case, it's not doing that in like a distributive way. If this had come up and made like a peak and then was like a bowl shape up top and it was like extremely low like this, I would be really singing a different song here, okay? But it's not. Every one of these is like a high trade with really sharp bottoms, right? They're all rounded. It reminds me of, I kid you not, like this reminds me of what we saw in AMC. In fact, let's pull it up because I think it's worth looking at. This reminds me of what we saw in AMC in 2024 with the big move up. Like, this is a good comparison because this happened repeatedly on AMC, but there were just clear and distinct differences, right, between how these things happened. Notice the nature of these bowl-shaped upthrusts, like how you have these ridiculous high peaks with high volume, right, but then they're failing. They keep making lower lows. Yeah, and there's these U shapes all throughout. So this is like the distributive version of it, Take that and put it into contrast with what you see down here. And you can see it's almost the same. It'd be easy for somebody to it'd be easy for somebody to look at this and say, well, it's the same thing. No. It's not. You're trading far more on the top here than you are on the bottom. There's very little time spent in the bottoms. Here you have almost all of your time is spent low, very little time in the top, right? It keeps kind of working its way downward. Here you have basically no time spent down bottoms. All of these are like sharp points. Almost all of your time is traded high. And you have these really strong, like rounded tops. And yes, you know, it makes like moves that, again, that are kind of odd at times. Like this is a little bit distributive right here, but it is because it pushes up so it can go back down again, right? But ultimately, like this is a really bullish setup, right? And this is basing it all on the side of a macro creek here, right? And that's what I'm trying to get at, is like it's pushing up against this creek and it's doing it in these iterative motions, bounce, 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 like this. You see the iterations. You can see the repetition of it. You can see the iterations in it. This is a really good setup. Now, normally, I would not suggest that a market, like a stock like this, could go to the moon or something, right? Like, that's not normal in the stock market. It doesn't happen very often that that's the case. But the reason that I thought that this was going to go so high was based on what? A couple different things, right? But one of the biggest ones was like, it's kind of strange, right, to a lot of people. But one of the biggest ones is like there's a lack of a test here that needed to happen around 14. They left it open and then they went low instead. So you build out this huge amount of time spent, but you didn't come back up to retest. Then also there's these constant motions, right, to like bring you back to the upside. There's this constant effort to try to like build you back out, right, directively to the upside. Now, again, would I have suggested back then that this was going to happen in 2 days? No. I had suggested it would happen over the course of like, I don't know, like I thought it was going to be like this over the course of like 2 months or something like that, I think is the way I had drawn it out. I had the right exit, I had the right bottom, all that junk, but I thought it was going to take a lot longer. So when I look at something like this and then I compare it to an Apple, which traditionally does not do this. I think I even said it in the chat. I think I was like, it's not like a meme stock. It doesn't normally have this problem where you have these divergences of like direction where it's like almost like it's not doing something that you would think it should do. And then it goes in this weird little alternate path, you know, to try to accomplish this or that. And you're like, why is it doing this? And you realize at the end, like it's going to have an explosive move because it's put this off for a really long time. That's a really bizarre thing. I don't see that a lot in like major tickers. Certainly not something like Apple, for example. Okay. But this is a very real comparison. Like it's a strange one for sure, but it's a very real comparison. And this is huge. I don't know what exactly it means beyond just, you know, am I saying this is going to happen overnight? I don't think so, you know. And like I said, there's certainly ways of maybe measuring this in accordance with what we think might happen on July 9th, so on and so forth. There's certainly ways of looking at this and saying, well, you know, it is bullish, but, you know, this or that. Look, the major motions here are the same. And that's what's important. If you look at the big picture, you take this and you try to take it too literally, it's going to look like it's going to go to the moon, right? But if you look at the major motions on this particular setup as a bull pattern, these are the same. Now, this is a really high push, no doubt. It is. It doesn't go that high right here, did it? If this had gone this high, you might be like, oh, would that have broken the mold or something? Not necessarily. I mean, it's certainly a little bit more of a high volume push with a high volume sell-off, very volatile. But remember, that what we're not seeing is that this didn't actually come above this top. So ultimately, this is still the peak. This is the valley, the first valley, and then it drops down again. This is the second one. I don't know why I didn't do this as the example before, but I'm going to do it now. It's a good example. This is a great bullish pattern, in my opinion. So you have this really big push, this build out, and it drops down again. It does not make a lower low. And in this case, it didn't even make a lower low here locally, which is great because that's the same thing here. This bottom, this bottom. So you have the same exact push almost. Yeah, it comes really deep in between. That could be seen as a negative thing, I suppose. But ultimately, it still makes a higher low here. And it makes a higher low based on the previous low. So it's not like we broke either one. Didn't break either of these bottoms. Okay. So there's strength there. So now we're in this kind of motion of like we're chopping. Maybe we're in this kind of motion right here where we just started this first drop, or we're kind of early along and we still got to do this business. I don't really know. Doesn't matter to me that much, to be honest. A breakdown's a breakdown. So in this case, probably would have seen that as the breakdown right there. In this case, I'm looking at it like that could be it. That could be the breakdown. Is it possible, again, that this is still going for a longer period of time? Maybe. There's a secondary kind of motion here as well. Because you can look at every low and just say, well, then there's a second one. And this hook comes up and touches it and comes back down again. It does. So, like, we could keep doing that indefinitely. You could do another one right here. So either way, could this come up, to this top at a later time and do that? Yeah. Could it be right here? Yeah. I don't know. I don't know the answer. That's just I don't know yet kind of thing. But what did happen is that when this came down, it continued to come in with strength. And it made a higher low. And then it has a stronger auto reaction. So this is where the next iteration starts. And this actually came down and had a pretty nasty little wick right there. And it has a little M shape. Now, we talked about that before. What's curious about it is that after this point in time, the final motion is actually a bit of a reversal motion, right? The final motion is like a spring that just barely dips below that final push. So we haven't seen anything like that yet on Apple. It's not there. That would be, in my opinion, wherever this final iteration is coming beneath that bottom. So if it were here, for example, and it made another push up in the next couple days, and then it came back down going into July, which is what I'm suggesting could happen here. You're just at this like inflection point, right? This certainly could be it. I'm not sure. I don't know. I really don't know what this would look like, to be honest, right here. I'd have to see a pretty obvious bottom, and I don't see one yet. But we're not there yet. So forget it. I don't know. Maybe it builds out sideways from here, and that's all there is to it. So we should, if that's the case, you'd see like a push here and then a higher push. And then it would retreat back down and probably do it one more time going into the 9th. This is a guess. I think it'd be right here. Yeah, and that would make sense as a potential, that could make sense actually. Final motion, something like that, okay? I'm not seeing how that's any different from this setup right here. And for those that would have called this a bear flag or something, been really wrong. So I look at this and I'm like, man, that to me looks really solid. There are some like minor differences. You can't ignore the fact that this didn't actually make an advancement here. So again, maybe we're missing pieces. I'm not sure. Maybe that happens here. I'm not sure. Not there yet. But for now, I would suggest that those are extremely similar in terms of setup. And I've seen this other places, but this just came to mind. What does that mean exactly, Booksy? Where would that go? Well, remember, this had a target that was not met, right? And that's where ultimately, like, I hung my hat. I was like, yeah, I don't think it's going to go there. This one, the targets are a bit different, right? Because we're talking about where is it not gone in the last several months. And unlike the rest of the market, Apple did not return back to the January marker. The January marker is probably best described here, where it starts the year, and it does go out into the 8th, which is similar to the other charts. It's at 242.63. This is not like the most interesting level. I think there's other gaps. There's a gap above and below it, back here here in February. There's also perhaps, and I can't even really see it very well, there's probably a gap right here at 254 as well. I looked at that and I said, that's the 30th. There's two possibilities. One's the 30th, one's the 8th perhaps. Those are the most likely candidates. And that's going backwards in time, of course. So you're talking about between 242 and 253. Again, does it make that in one giant move? I don't know. I don't know if it could. That's a crazy move, right? It's huge. But when you look at a fib extension here, not knowing exactly how low it goes, I just kind of have to pick what I think is like the most likely spot, right? And the fib extension here has some pretty strong implications. The 300 mark, for example, is up here at the 1618 up to about the 1854. That's this area right here around 300s. When I look at these targets that I had in mind, none of them particularly match this. And that does make me wonder, hey, if you went into another spring, I wonder if they would drag this down into like a spring action that's kind of deep, like deeper than expected, maybe even slightly below this bottom at like 180, right? Could that change things? Yeah, because then the 1272 is more or less at 254, which is closer to like where you might think it goes. So I don't think that it's impossible that this has kind of a deeper spring motion, especially after that July 9th bit, and we'll see what happens. That could be a scare, for sure. And that could change the extensions here quite a bit. But this is still, to me, like a super bullish setup. And when I look at the widening, it's even more so convincing because look at where this widening appeared on two levels. On the widest scale, there's like a 1, 2, 3, 4, and then the 5 here on the widening would not have even come back up to meet 220 yet, which is right in this intersection right here. And that widening does cross right there around 226. So 226 seems like a very likely place. There's already a trajectory there. And by the way, this trajectory going up matches the trajectory on the bottom of the widening coming down. So this trajectory is already kind of built into the chart as it is. This could be like a wave cross, very, very simply put. That doesn't necessarily stop here, but you could definitely make an argument it could, I suppose. So you could say like, well, I think that's the wave cross and it's going to do this going into July and pump up to 227. That's like the big move. And then there's a secondary move afterwards if it breaks out here. Notice that both of the widenings begin at roughly the same zone. And it's these two zones that we already identified. So one's at the January or the December 30th date right here. This is like where the widening begins. This is center mark for the widening on the bigger picture. The other widening is actually the one coming down more locally, even though it's still been a while, which is February. It's closer. This guy coming down, widening out, still hasn't quite broken out. It broke out, in my opinion, back in May, but I would say it hasn't quite because it kind of created another creek right here. So it's kind of sandwiched between two creeks. This is the reason why I think if it dropped, it would drop pretty far, because there's like a space here where like this could have a pretty sizable drop down potentially, real low all of a sudden if it went the other way. Because of that space here, it's sandwiched right now. It's pressing up, having some trouble. And if it goes the other way, it's going to be nasty. Let's put it that way. It would be a big drop. But yeah, that widening begins up here right in the same zone, 245. So there's a really good, in my opinion, it's a really good setup for Apple. You're talking about easily like a 25% move, maybe 30% move. And when I did the measurement on it, and this is a major high liquid stock, when I did the measurement on it, and I didn't use this guy. I guess I could have. I don't know why I didn't do that. 64. I think because it was too steep, it would have already passed by that opportunity. Yeah, 64.12. 64.12. That would have been right here around May 30th, which probably would have been like this top or this bottom right here pivot. And in the middle, I didn't do that one either. That one's pretty good. That's 49.65, at least on my chart. That one's possible. That one's still at play. That looks like it's going to be the July 9th right there. It's definitely July 9th. So that would be like a July 9th downward pivot, probably. I'm doubtful it goes up into that date unless something is announced between now and then. It could go up into that date, but that's the next pivot on there. So when I look at this, I'm like, this is a really good setup. Seems pretty straightforward. There's a risk here it drops low for sure. You could just wait for that to happen, I suppose. Or you can just say, well, I don't really know. And at this point, to me, I'd say upside looks better. Now, people have come out of the woods to say that, well, Apple's lost value and it's not good and da-da-da-da-da. Yeah, I don't know, man. I don't know what to tell you. Anytime there's like an extreme amount of negative news around one of these big guys, they always turn tail. Like Tesla had the same stuff. It was getting trashed and it was low. It had dropped a huge amount. It was getting thrashed. And as the news is getting worse and worse and worse, I'm sitting here saying the technicals look better and better and better. And it's easy to look at the news and say, well, it's bad. It's just bad news after bad news after bad news. And yet, the technicals were looking positive. So I'm not saying like you should always buy bad news, but sometimes it's that direction of like, maybe that news is really just kind of reading what's already there. They're not looking at it future speak. If something positive changed here, it would be a very positive move and highly likely to have some pretty major developments. So I'm looking at it like this is interesting as well because this actually is an August move. So I did the measurement and what I did is I measured where these guys were initially pointing, and they're pointing towards April 24th, which is curious. I don't know why, but that's where they were pointing. So the initial bull intersections were right there. What that represents to me, you might be saying, well, isn't that the backwards? Don't you want it to go to like the final date? No, I really use that as like a pivot for a wave. And when I put the wave on, it works. It clicks really well. So it may seem a little bit odd to do that, I suppose, to some. But basically what I'm saying is that this is like a macro wave right here. And that this is essentially like the pivot point on the opposite side of that wave. When I drop the trends in, they work pretty much flawlessly. Like they're all exactly where you would expect them to be. You can move it wherever you want to move it. It doesn't really matter. Once you get the two ends in the middle, you can take this curve and like drag it wherever you want. If you drag it to a bottom over here, you're going to find that it lines up with the top over here, and this and this and this and this and this going all the way through. Because I think that's the true wave. It doesn't mean it has to finish. That's not what it's saying. It's just saying that's where bulls are going to go if it does go well. So this has potential for some pretty massive return. So my guess is that we're going to be going into August, just like AMC in some ways, going up in that direction, even if this has some pretty nasty downside. So, yeah. So like, I'm really looking at this like it's a potential big money move. Another one I'm looking at, and I'll check out CMBM in just a second. I'm looking at XRP. I'm not really huge into it, the crypto stuff, but this is potentially like a really strong one. I actually like that this is a more regular. I mean, it's a very regular flag motion. I don't think that this has the kind of move that a lot of people thinks that it may have. It could be very much a come up to $4, $3.50 area and stop. But again, that's a pretty sizable move. From where we stand, that's a 70% move. This is not a sleeper, or this is not some kind of like weak move we're talking about. We're talking about massive move potential. Evidence for going farther would have to come from something like a breakout from like back here when this did like a flag and it broke back in 2017. It had a pretty decent, huge leg up. That would be another way to look at this. Anytime it's come above the top, there's always been sell-off, and this is a weekly chart. Clearly, like this could be no exception to that. I think that on the big picture, this still looks a bit difficult to read. You know, the waves are clearly there, but there's, in my opinion, there's a lot of evidence that this could even be already in a distribution pattern, potentially, because this to me looks like the setup is distributive. I'm looking at the cross. I'm like, well, it crossed up, so maybe it's not distributive, but it would probably need to come back down before going up again, even if it did push up now. So I'm not particularly bullish on it right this second. And just the way that I read charts would suggest that this, if it goes above like 250, it's probably going to go all the way up to 375. Then I think you'd be in a situation where, yeah, you could be in a bit of a crappy place. That's like August. Maybe it goes even a little higher than that. It really doesn't matter to me. I'm not saying it moves with everything else, but there's certainly a possibility then that you could have a more major correction longer term. You can see the pattern as it stands. That's really where it would go if it fails to advance. So, and that's just a long-term wave here. It's not really that complex. Like there. It'll probably come all the way back down. And that's, again, kind of bearish. But certainly there's a possibility, you know, this had some kind of breakout moment and then comes back and lands on top here, but that's a little different. So anyways, I think XRP looks really good if it can hold this flag and break out here. It's not quite like a surefire bet yet. And I will say that if it does drop again, since this is like a 1-2, it has to jump now, like up and over, in order to get that 3-4 that goes up. If the 3-4 goes down, you're really looking for more of a spring. So if it has like a fake out and then it moves low, it's going to come back all the way to probably this floor by about, well, I mean, I hate to put everything on the same date, but it's probably about that same time in July. I don't know why that would be the case, but it is. Like, it doesn't make a lot of sense to me why that would happen to coincide with tariff stuff. Can't really see why that would matter unless it's like a hedge and people are planning on hedging against it. Maybe that makes sense then why it's setting up time-wise the same, but that's where it is. That's the intersection right there. It's on like the 14th or the 7th, one of those weeks. So if that correction does go down, that's where it's going to go. But then again, it's like, well, could it still go up after? Yeah. I mean, this is interesting because the way it's set up, it's in a pretty tight flag, which looks nice. And that means that it will have a more obvious breakdown and breakout instead of it being kind of loose and obscure. So I find that to be kind of comforting at times when it's simple. Yeah, and I don't think IW ever made it to the spot I thought it would. I thought it would come up to like 220s. Same with as that last leg kind of bit on Apple. CMBM. I'm on the weekly. Where is it at? 34. It hasn't really gone anywhere. Yeah, I don't know. I thought it might come down to here, and it did. Honestly, it's kind of a bad sign. Yeah, so this is not great. So when it dropped, this was the area I thought I would get in around. I'm in around 33 cents, I think. I think I bought in like right here or something, right around 33 cents. But it should have come up above, made a higher push and hold. Instead, it made a higher push and rejected and came back down beneath the ice and the creek. So that's not good. Yeah. So that's a bad move right there. That's a distributive action. Bought back in, RSI stayed high, and then it pushed up again. Yeah, you got to be really careful here. If it comes up again up to like 34, 38, and then it drops again, I can't predict everything in the market, but I would say that it definitely have to hold at that point. A jump. It's so ugly. Yeah, it would have to hold above there. This could be just one of those delay tactics. This is kind of the motion of final bottoming. But notice like at that point it's beneath that trend. That's not bullish if it stays beneath there. So you can't just have repeated upthrust through this ice level. That's not bullish. It needs to at some point, and I think even right now it's at risk. You can see it's starting to slump again. It's at some point it's at risk of coming down and failing the major creek, which is kind of coming through here. I hope you can understand what I'm saying. I find it to be a bit meh at the moment. So this needs to do a jump. Yeah, beware of this. What needs to happen is a jump up above that holds above 35 cents. So if you're not in this, I would say support at 35 to 36 cents. Really 36 cents, I'm sorry. Support at 36 cents is a must for confirmation here. I think if it holds that, it's probably going to go. And you could get a decent move still to like the 40 cent area. I'm not seeing, I don't know where 62 cents came from. That's not on my chart, but maybe you're thinking about this high over here. Or this area right here, I guess. This is just a really flat cat ear. Don't let it deceive you. Like there's still a wave cross going on right now. This needs to break back above or it's not going to run. Like I know there's a lot of chop, but it's always, if it's something like this with that secondary action, you need to pay attention as closely as you can. Be very wary about 40 cent as well, because sometimes in a cat ear that's distributive, it'll pop up above the top of the first part of the ear, which is right here. This is like the peak. I don't know, man. This might even be one that you don't want to hold on to much after 37. Because this is common too in a final cat ear. So yeah, just be careful. I don't think this is the best trade. It looks like it's going to try, and if it fails, wherever it fails, no matter where it fails, if it fails, I think it's not a good place to be. That would probably be the end of it. And this is a widening right here, but the top of the widening is like 36 cents. I mean, it's not exactly a lot, you know. I think if it hits like 38, I probably will be very cautious, because this is not my favorite setup. If it had dropped here and immediately come back above and held, that's different, because that would have been a signal that this is like a reversal M1 too. You could then have more hope that this is going to push up and hold here. As it stands, this is like weak. Push right back into the creek. I had to do it again, which is odd. And it makes a higher low. There's nothing wrong with that. It's just this bigger picture really bothers me. So I'm very concerned it fakes out. I'm trying to identify if there's like some other level there. It might be this guy. Yeah. So it's like getting hung up in the gears. So it's this right here that I'm concerned about. So this was possible before, I think, because of the nature of where that would be. You can see why. This to me looks meh. So if it breaks above here, it's crazy how everything always lines up like that. Like it always lines up really neatly. This is a danger zone. I don't like rounded bottoms like that, but this is a strange chart. I mean, so what strikes me, I suppose, the most is just consistently kind of pushing lower. So each of these up thrusts were driving the price down further and further and further. And their motions are going up higher and higher. It's a widening. So I guess my question is, what comes next? And it's pretty much the same pattern every time. It looks like it goes down into a like kind of a ledge and then drops. I don't know. This looks pretty straightforward. Most of the time it's around this level at 350 and then it has a drop. So what would be different about it now that would make you think it doesn't drop? Yeah, but this doesn't have a drop. Like there's nothing there. This is not, so far it hasn't changed character. This has not done anything, in my opinion. This even is a really high pump that doesn't go anywhere, which is even stranger. In some ways, it's very strange. I don't know. I don't know what this is right here, but most of them you can see they've rejected here and dropped. So I guess what I'm wondering is why would you think this is going to go up now? Even though it's like really overbought and it's not moving anywhere. One, two, three, four. It's always there. 1, 2, 3, 4. So this is the low. Here, the low point. So somewhere in the middle here you have the major cross. Looks like here to here. I mean, there's a possibility it comes up to like 392. That doesn't seem like really worth it though. To me, seems like a really like weak move to put a lot of money into or something. And then look at the trend here. That's also a possibility. That doesn't really give me a lot of confidence this is going to go particularly high. I mean, it already hit this mark from the top here. There's this guy. Again, it kind of looks like maybe you're going to get a pump to like maybe 4, like 397. That's the wave right there. But it seems like after that you would just drop. Like these are more exaggerated, but they're the same exact thing. Like they're functionally 1, 2, 3, 4s. Like they're all the same. 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4. They're all downward facing M's that aren't making higher highs. So I don't think it's going to pass through there. But I guess you can trade it that way. I just don't see why you wouldn't drop through. I mean, there's a huge gap down here, liquidity gap below at like 3 something. I'm not seeing any kind of reason to. It just. Let me put it this way. It's kind of like you've got no change of character thus far, so you're really looking at an incomplete something or other. And in order for you to really say, yeah, this is going to do something different, it has to sort of do something different. What would be different to me would be if this dropped down and it didn't make a lower low. Like if this went to here and it didn't make a lower low and then it pushed up above, I would then be in a situation of like, oh, this has made a huge change of character. It made a higher low. But right now, I'm not seeing anything that suggests it's the exact same thing every time. So, yeah, it could come up. That's a nice push. It did it back here too. I mean, it came below the red quite a bit, and then it pushes up to 390, and then it dropped. It's just the pattern here is essentially identical, so that's fine. I don't know. Maybe there's something else to it I'm missing. This is weird to me. Maybe it's just the nature of people being bullish that's causing it to go up high. But I would not be suggesting that anything's changed yet if it hasn't changed. This is high up. But then again, this was a huge move, so I don't know. That to me looks like a hook. So there's two ways this changes character. One is that like it drops here and maybe it doesn't go to a lower low. Now I don't know if there's any other place it could stop. Perhaps like there. Stop short of going down below like 250 or something like that. It'd probably come close to hitting a creek regardless. Next creek is really far. So if you're asking me what seems more likely, I would say down here. I'd have to check that, but let's see what happened last time. I don't know. Like, I'm not against something that if it's changing character, it's changing character. You know what I mean? Like, that's certainly a possibility. This is nice. But I don't see how you could possibly look at something that's just not changing character and just kind of ignore it for some other reason. So just because we find like similarities in the motions doesn't mean that it has to do that again. That's not what I'm saying. I would just say like nothing here strikes me as a particularly strong change of character right now. So it looks like it's hiking it up like it did here on that final M shape. And it brings it up over the top of the previous. And then tries one more time to drop it down and sees if it's successful and makes a new low. It did the same thing back here. This rises up. It does push higher every time. You can see it. And then you're seeing a similar thing right now. It's more exaggerated. It's probably got more attention if it's on like social media and junk. It's just propping it up again. This S curve, this S curve, this S curve, and then tries to get that ammunition with FOMO and then drops it back down. I don't see that as any different, so I'll leave it at that. But should this change character, then yeah. I think you could have a pretty strong case if it hits one of these levels and then reversed. Oh no. The appeal in this is the consistency though. So I would trade the consistency, not the hype or the FOMO. Yeah, this may work out, and if it did that, it'd be really strong, but that'd be a change. So right now, if it dropped down beneath, where would it go? I don't know. This seems really far off. I wonder about timing too. I wonder if the timing is expanded out. That was 31 days, 26 days. It's fast. Even in just doing a linear progression there, it would be like at least 5 days. I think it'd be more because of how big it is. Maybe 10 days. So instead of 31, it would take maybe 41 days. Yeah, I mean, this is a big move. I don't know where that support is. It looks like it's me check something real quick. I'm trying to do my due diligence on it. That's the 50% mark there. It is roughly around the 50% on the RSI. So this one came low. It's kind of weird. Like way low. Like it didn't have any top. Like it's all slumping. I think it's here. I actually think it's way down here. It's this hook. And I know that's frankly where my thing is, but that is the drop zone. Like we're looking for this drop right here, like the drop in to where the there's really only two spots. One is right here at 469, 479. The other is like right there, 530. So maybe there exists a couple possibilities. So one is like pretty much on point, 150. We're going to ignore this because this didn't really help us. Creeks were not really consistent. Like 150 around late June. The other was, again, maybe like a change of character. It's possible. In the middle, it seems to be where that steeper sell-off is, which is interesting because we already had that on the chart. That's very slow. It works well here. That's like a really solid middle. That's right where it is. Doesn't work so well on the other one. So it would be like over here. Yeah, I don't know. So if this went to, if this did go back to the downside, I think it'd be a good, maybe a good buy-in. Usually after 3 hits, and this has 4, 1, 2, 3, 4, 1, 2, 3, 4. Usually after 3 hits, it makes a move. So it is strange. It should be making a decision. I kind of would think that if it makes a change, maybe it does like a double bottom or something instead. That worked pretty well. That would be like this hits this top and then slumps down and then drops, but instead of making a new low, maybe it double bottoms or something. That could work. Or just barely makes a new low here. That would change a lot. And each time it comes back over this red mark. So this could be like where it crosses up and over. I don't know. There's a lot of other stuff we could look at, but I'm going to pass personally. Potential for upside here is there, but it's not that much. 10%. I can get that somewhere else with a little less risk, I think. But, you know, I think longer term, if this ever dropped back down beneath these levels, beneath like 250, it's got a lot of potential. All right, everybody, I'm done. It's like 11:60 or 11:60. It's like 11:40 my time. I'm gonna, I think I'm gonna head out. I didn't do as much work on GME. It's similar to AMC. It has some room to the upside. It has a little bit of downside potential here today, but if it doesn't hold up here, I think it's going to drop because this is starting to look like a wedge. And it definitely is like a wedge. I don't know where that came from. Yeah, so I mean, if it doesn't hold up here, I think if it loses this wedge, you're going to drop back down to near the floor. I don't think it's a severe drop. I think it would probably come back down to near the floor. Otherwise, it breaks out. Again, it should go up at least to 25.70. I think we're looking at that 26 area still. So that was the big one for us for GME. Yeah, no problem. And then, AMC, just one more recap of the numbers here. Right now, it hasn't quite broken out. It's kind of struggling, and frankly, it's having some issues. It looks like if it does, it's going to be sort of this whimpery cross that's almost missed. Like it's just barely eking over it right now. You're going to watch a lot of numbers going up, unfortunately, because you got to watch the breakout at 315, a higher push at some point over 323. Okay, then you've got to watch the motion to 330, and then a higher point at some point to maybe 40. Looks like 340. And then again, same deal. It's like every time there's like a move, and then it needs to make a higher high. If it doesn't make the higher high, but it makes the move, then you got to be careful that it's not advancing. The next one is the advancement over 360, and then the push above really here, which is like 346. So there's a lot of little spots. I think the trade itself is probably best from, if you're doing a short-term trade, just a swing this week, would be from maybe 312 up to about maybe 340. Timing is tricky here because of this short week. It could last till Friday, maybe even Monday. But that'd be a good swing trade, and it's 10%. So y'all have a good one, and I will talk to you later.